We'll skip that for now. How to get, I want to talk to you about this because I want to show you that there are two major styles of trading. My traders fall into three categories, but they're hourly traders. Some of my traders are hourly traders, meaning their goal is to be profitable every hour that they trade. So the first hour, at the end of that hour, they have pulled money out of the markets, net. And then they trade the next hour. So they treat every hour like a single day, right? So hourly traders are looking to be net profitable every hour. That doesn't mean they trade every hour of the day. Most of my traders trade for 2 or 3 hours and they're out. They make their daily goal and they're gone. A lot of traders trade 1 hour a day. Some traders trade the brackets. They trade the first hour and the last hour. The last hour gives them that swing on the daily sometimes, right? Buy into the last big bar toward the end of the day. So there's hourly day trading, and then there's day trading to swing trading, meaning the traders that say, all right, I like some short-term trades as well, but Oliver, I'd like to kind of ride things for 2-3 days to mega gains this way, not just the hourly thing, all right? So it depends on who you are. There are some traders that are wired better for just being in and out of plays. Like Dan's trades were this category. All right? Shorted rim, several minutes later, took out $500, repeat. All right? Went long TNA, several minutes, took out $470, repeat. That's the hourly form. The swing trading form is more position trading where you can buy into this bar toward the end of the day and let's see how many days this thing runs. Or you can buy into this hour and let's see how many hours it runs. All of these things, all of these styles we teach and drill into our traders. Now, every one of our traders starts off going through a 12-step program, starting off with small amounts all the way to $2 million. All right, we got a trader trading a little bit more than 2 million. He's beyond level 12. We got one trader beyond level 12. But most of the traders fall within this category. Now, as you can imagine, there's a lot of traders here, and as you go higher, the trading ranks thin out. It's like a pyramid. All right? There's one trader beyond level 12 right now. So here, every trader starts off with a very modest goal. And I say, here, I'm going to give you a little bit of money, and I want you to do this. I want you to go out there and find elephant bars and 5 minute, whatever, bottom and tail bars, take your plays, and bring me back $20. And I don't care how you bring it back to me. Bring it back to me $1 a day, and 20 days later, Oliver, here's your $20. Right? Or here's your $20 in 2 minutes. Fine, whatever. However you bring me $20, bring me $20, and then I'll give you $10,000. Then you have to bring me back $60. You bring me back $60, I'll give you $30,000. Now let's do it with $30,000 and bring me back $130. Cumulative. Maybe it's $15 here, $20 there, $5 there, but accumulate 130 and I give you $50,000. Give me 200 and I will consider you a graduate. Upon graduation, every dollar you made getting to graduation, you get a check. This is yours. Happy graduation. So your gains during trading are accumulated and paid out to the trader upon graduation. Now let the games begin, because this is where you potentially can make your money. You have $75,000. Your goal is $400,000. Now, I want us to assume that you have gotten to level 6. I've given you $150,000 in buying power. All right? Your cumulative target goal to move beyond level 6 is $1,200. You can take positions up to 1,000 shares at a time. Okay? Now let's work with 1,000 share lots. All right? Now, let's do this. What could you have done today at level 6? This is QCOM. Anybody hear that stock before? All right, QCOM. This is today's action. This is yesterday's action. This is today's action. It gapped up, number one. That's fact number one. This is a 5-minute chart. Each bar represents 5 minutes of trading. So for the first 5 minutes, at first it gapped up it traded up. And when it was at the high of this bar, what kind of bar was it? Oh, what? Right, but what kind? You know the name of it now. A bull elephant bar, right? It was a pretty sizable bull elephant bar. All right? And then all of a sudden, the green started to evaporate, right? Now, this is all happening within 5 minutes. So we gap up, rally, fat, giant green bar. The green starts, a third of the green disappears. Half of the green disappears. All of the green disappears. Then it goes even further to start producing red. What do you think my traders are trained to do on topping tail bars way up there? Short. All right? Several 5-minute periods later, we get a bottoming tail bar near the 20-period moving average. So short away from the 20, topping tail, cover at or near the 20, take your profits out. 1,000 share buy potentially get you. This, Dan traded this play this morning in bed, right, Dan? All right, laptop in bed, and here is the P&L, $517. That's a live trade from this morning. Here, today's action in PCAR. Anybody hear of PCAR? PCAR? It's one of the stocks on our trading list. Now, look at the signs here, guys. Look. This is an intraday chart. This is a 5-minute chart. Every bar is only 5 minutes a period, 5-minute period. You know what that bar is, and you know where it's at happening. It's happening below the 20 with a lot of space between the top of the bar and the 20. This formed the low. Every low is formed a small number of ways. And we teach you every single way. All right? There's your run. But get this morning. Now, this morning, that was yesterday. So this is yesterday. This bar opens today. Now, find the igniting bull elephant bar today, the first one. Which bar? Do you see it? I know it's a little light. Boom, right there. Doesn't this ignite a brand new direction? This was down. And it ignites something brand new. Right? This is the fattest green bar in actually quite a while. You can use yesterday's data. So here's your buy bar. And where do you think your sell bar is? Sell bar, your sell bar. So you bought this bar. This is your bull elephant bar buy. Stop under the low. Ride. Isn't that a fat green bar way above the 20-period moving average? That's your exhaustion bull elephant bar. Igniting bull, exhaustion bull. Buy, sell. At level 6, $1,000, 1,000 shares gets you close to $1,000, $1,100 or so on this one single trade at level 6. Now there are times you're going to have multiple trades on. Oh, here's a bottoming tail, and here's a bull elephant bar in PCAR and a topping tail bar in QCOM. So you got QCOM short with 1,000 shares and PCAR long with 1,000 shares, with the stop above the high of the short and below the low of the long, and you just let the trade do its job. Part of my job is to kick traders out of the chair, so to speak, once the trade is on. You become the problem once you have placed the buy and put the stop in place. All right? You're the problem. Traders, go away. Just watch Oprah or do whatever you do. Just let the trade work. Now, what did you do shortly after the open in this stop? That's right. Topping tail, way above the 20-period moving average. Stop right above the high. Let the trade work. Now we get below the 20-period moving average, sizable red bar, cover. All right? And this is an income approach, $600 or $700 trade here. All right? What did you do here? Here's yesterday's close. Stock opens and produces a fat red bear elephant bar. We short, we put the stop on high, and we let the trade do its job. Bottoming tail bar, below the 20-period moving average, what are you doing with your short? Covering and buying it back. What led to this rally into the following open? What kind of bar? Every bottom is formed a small number of ways. You know all the ways? You can pick bottoms like an institutional pro. The open this morning, MRVL. Short. Now, if the stop above this high is too far, you've got to maybe take your 1,000 shares and do 500, just so you're not hurt and just in case it gets stopped out. All right? And there's your drop. Big, giant red bar way below the 20-period moving average. So I would probably start taking profits here on this bar, cover half. Here's another fat red bar below the 20. Sell half of the half, or sell it all, or cover it all. Is this clear to you? Yes, ma'am. I like that. I like that point. She said, this is great if you're only looking at 2 to 3 stocks. But what about 50? That's a great question. You know why? Because let me answer that question with a question. How many stocks does a New York Stock Exchange specialist in the pit have to trade? 1. And they're the gods of Wall Street. How many stocks on average do you think a NASDAQ market maker is responsible for trading? Not even. Not even. 3, 5 on average. Right? Why are you looking at 300? Why are you scanning the S&P 500? That's not the way you trade as a professional. As someone who wants to pull money out every day, you focus and narrow. You take a list of 50, and yes, it rotates. Maybe this 5 during this month and a half are your go-to 5s. It doesn't mean that you ignore the others, but this is your 5 go-to ones. Does that make sense? All right? And you know what? When you narrow your world to 5 stocks, you won't miss a single bottoming tail or a single bull elephant. You'll catch every single one. And you'll become a lot more profitable. Professionals focus. Retail novice traders want the whole world. They listen to Kramer spit out 189 different symbols in 5 minutes. They're all over the place. All right? It's not the way professionals do it. All right, guys.